Hi, it's Larry Gaines, Power Cycle Trading. In this video I'm going to show you a really cool trade that set up for Apple, and this is using a option strategy, a weekly option strategy that is just very cool and one of my favorites. But it's one that's used for just selective situations. Before I get started though, we're still currently having our second anniversary special. And this is just to celebrate the second anniversary of the Power Cycle trading model that was released. And for the special, this will end Monday night at midnight. But you will get your choice of either one of our signature courses, the day trading stock course for ETFs and stocks, or you can get the swing trading course or the day trading course for futures. You'll also receive Option Trading Made Simple, a really great option course. You'll receive my earnings game plan course. It's a weekly option trading course for earnings. You'll get 1 month free to our Power Outlook, which is a daily video newsletter, and 1 month in our virtual trading room. So you can get all this for just $497. It's for a limited time, and it will end on Monday night, this Monday night at midnight. So you can get the link on this email letter with the video, or you can just put in the URL, just put in powercycletrading.com/July 4, and it'll take you to the special page here where you can get the special offer for just $497. So here's a really neat trade setup, and this happened to be on Apple, and it's based on our swing trading model course, which is available on my website. It's a really great course that teaches you how to swing trade using my trading model and a methodology that I developed strictly for this. But on this particular trade setup, it came on the 28th of June, and it was for Apple, and this is where the system kicked in. It nailed the bottom here, and this is based on a rule-based system, so it's available to you on my website. You can go in there and find it under boot camp courses. It's called the Power Cycle swing trading course. But anyway, first step came on the 28th, and then that's the daily chart to show you the setup, and then I'll show you the trade setup as far as the option strategy used. And here's the hourly time frame, and again this was on the 28th at about 11 to 12 o'clock Central. Basically the swing trading setups that we use, that we have developed for the model, is based on using the daily time frame, hourly, and some other shorter term time frames in order for system entry. And then once that's done, then I look to see what kind of strategy I'd like to do as far as the trade. You can either buy the underlying stock, or what I prefer to do is use some type of weekly option strategy. So here's a weekly option strategy that really set up well for this particular trade. Now this is a very selective option strategy, and it's really one that I like to use for powerful breakout type setups. And so for swing trading, you want to do trades that are going to give you that powerful momentum type breakouts. If you find those type of trades, which we can identify with our model, then this is one strategy that I like to use. It's a back ratio spread. So I'm going to just show you what this particular trade looked like set up on the 28th. Instead of buying the underlying stock, the option back ratio spread call spread was used, and this particular strategy got into the trade at 157.50 per contract, and it was basically combining the 395 and 400 calls. So I'm not going to go into a lot of detail, but I go into much more detail on this in my courses, but I'm going to show you just what it looked like on this particular trade using the setup from our cycle model and the swing trading model. So the cost was $157.50, that's per contract. The max potential loss on this trade, if it had gone against you, was $657, but your cost was $157. Now I'm going to show you the different time frames on this trade was put on the 28th, and at that time Apple was trading at 395.60. So here's Apple on the 28th. It was trading at the close, usually the closing price is around 396, about 396 480. 396.50 right here. So the next day I'm going to show you the different mark-to-markets on this trade to show you the potential when it does accelerate and move in the direction of the trade that you want it to move. On this is a breakout swing trade, so obviously we want it to move up. To take advantage of this, I'll show you what it looked like on the next day, actually on July 2nd, when the market was closing at around 420, and then also on July 3rd, the day before the 4th of July, and the market was closing at around 420.80. So on the second, actually the market was around 418.50 in that range. So let me just show you the difference on the mark-to-market. Okay, so here was Apple again on the 28th. The price was $396.50 when the trade was set up, and then on the 2nd, just a few days later, this was on a Friday, and then the 2nd was on Tuesday of last week. The trade on Apple was at 418.50. So on the 28th, the cost of putting this ratio spread on was 157.50. On the 2nd of July, Apple's closing at 418. The spread value was then $1,425 per contract. So your net mark-to-market was $1,267.50. That's a return on capital of 804%, and at-risk return on 193%. So huge profit potential here. So let me show you the next. Now on July the 3rd here, Apple is going out and trading around 420.80. So it's up another $2. So the spread value went to $1,585 per contract. Your net mark-to-market at that point in time was $1,427.50 net profit. So that was a 906% return, or 217% on risk capital. So it's a really cool trade. If you'd like to learn more about trading these type of weekly option spreads or option strategies, come join me at PowerCycle Trading. And make sure that you take advantage of our special right now for our anniversary, so you can get started with our PowerCycle trading model. All you need to do to get going is go to powercycletrading.com/July 4th. Good luck trading. Talk to you on the next video.